When trading futures, understanding your costs can be just as important as picking the right strategy, trading platform, and broker. In a previous EdgeShort, we broke down how to read your daily statement in more detailed terms, and today we'll be breaking down the various expenses you pay when placing a trade. The first item you'll likely see when you're reviewing your statements, especially the trade confirmation section on your statement, are commissions. Commissions are paid to your broker for executing a trade, and these vary based on your broker, your traded volume, and potentially the type of products you're trading. When trading futures, commissions are charged per contract, meaning if you enter and exit a position, you'll pay commissions on both sides, once to open the trade and once to close. Commissions can add up, so it's important to understand what you're paying and what other fees various brokers may try to tack on to commissions. At EdgeClear, we value simple and transparent commissions, so don't hesitate to ask your broker if you have any questions. Next, you'll probably see a breakdown of exchange fees. Each futures contract is traded on a specific exchange, like the CME for example, and those exchanges charge a fee per contract per trade. These fees help maintain the exchange's operation and infrastructure, and these fees are non-negotiable and can only be reduced by obtaining memberships with the exchange. So factor them into your trading costs. Like commissions, they apply both when you enter and exit a trade. Next on the list, you'll probably see regulatory fees, or an NFA fee. These are set by the governing bodies like the NFA to oversee market integrity and compliance. While usually small, they are mandatory and applied per trade, meaning each round trip, entry and exit incurs these fees. The NFA fees at the time of this video are only 2 cents per contract. Like exchange fees, these are non-negotiable. However, if you obtain a CME membership, your NFA fees are actually also waived. Last, you might see a platform fee or a routing fee. Depending on the platform and data you're using, these are fees that can be assessed by that market data and order routing provider. Rhythmic, for example, has a 10-cent per contract order routing fee. Some other providers assess higher fees, and some assess lower or no fees. And you can always contact your broker at EdgeClear to learn more about various order routing fees. These fees, like exchange and NFA, are charged to help maintain operations, servers, and much more for the various data providers. All of these costs, commissions, exchange, NFA fees, and order routing fees can impact your bottom line. Since they're all charged per trade, be sure you calculate your true cost per contract before placing a trade. We think it's always good to make sure you understand your all-in round turn fees, not just commissions. You can talk to your broker about this so you have a clear understanding of what each trade is going to cost. Thanks for tuning in, and remember, you should always know your costs up front. Hit that like button if you found this video helpful, and be sure to subscribe to stay up to date with the latest EdgeShorts from EdgeClear. Happy trading.